The markets are the sum of human nature. Human nature is part of the larger natural world around us. All of nature moves in patterns. It is only a question of whether or not we can recognize them. Ladies and gentlemen, welcome to this week's broadcast. This is Christopher Aaron. I'm glad to have you back. It is December 12th as I'm recording this, but it will be the 13th by the time you see it. As I discussed last week, we are going to look at some new markets, some new topics in this series of broadcasts, because this ability to recognize patterns, which is so important to navigating the markets and navigating other aspects of life, applies across various markets. It's not only about gold and silver. There are opportunities wherever we may look if we simply keep our eyes open. So tonight we will look at one old market, so to speak, the gold market. Let's have a proper update on gold, and let us expand our offerings here and start to look at some other markets. We'll look at oil. Oil is said to be called black gold sometimes. The other way we can think about this is that oil is liquid energy and gold is stored energy. So there are comparisons between these two markets that can apply to our investment and larger outlooks on life. It has been a while since we've had a good look at the gold market, so let us take a look in some detail this week on exactly what is shaping up in the technical trends. Now, as you know, here in this channel, we do understand the fundamentals behind gold. The debasement of currency, the unsustainable nature of the bank bailouts, and the inflationary policies amongst world governments. We understand the problems with unwinnable wars that are raging throughout various countries in the world. And in fact, your editor here, myself, I did participate in those wars, and this is something that led me in 2009 when I returned home from Afghanistan into the study of precious metals, how precious metals serve as a stop against governments from spending all this fiat currency on these unwinnable conflicts. Of course, we understand all of these things. However, if it were that simple to just isolate several of these fundamentals and say, therefore, the price of the precious metals are going to move higher, we would have no work to do at all. Many patterns in nature, as in the financial markets, are not simply so easy to pick as that. So there is the necessity for analyzing what is actually happening to the most important thing that we as investors or traders or speculators, no matter how we fall in that category, there is merit to monitoring the actual price trends, because the price is the one thing where all individuals come together. Whether you're buying or selling, you must come together on the present price. Now, this is the format that we're using here to analyze the gold market. This is a technical system that I've been developing for my entire career that helps us to align these probabilities in a very solid manner. And so what we have already here is we have drawn on this chart, the black lines you will see represent horizontal support and resistance lines. We're talking levels in which the gold market, as we look from 2000 to the present, levels in which the gold market, for example, notice how in 2006, gold was rejected here at around the 725 level, dollars per ounce. It backed off, and when it broke higher, notice how it came back to this same level as a retest and then broke higher again. So when we see two important levels like this within a narrow range that the market is respecting on multiple occasions, there is a reason for this, and it is good for us to identify these turning points because it will help us to identify moments in the future in which similar things may be happening to the market. So we had another region like this. Look at the 1,000 region here in 2008, rejected, broke higher. Look at the retest here in late 2009, early 2010. Look at the test right there in 2015. Okay, certainly some patterns setting up here that are worth paying attention to. I don't care if you're a stacker like myself and you just want to time your purchases better. Perhaps the precious metal is falling back here, so it would be better for you to wait all things considered, if you were going to plow some money into the sector, there's certainly merit to that as well. So what are some of the other ways that we study this market? Let's try to figure out what is going on here from a highest probability perspective. Okay, we have these horizontal levels. What else do we have? In the silver color, we are always looking at Fibonacci retracement numbers. Fibonacci retracements are the levels when we're talking about a large move like this, the move from 250 up to over 1900. We are talking about what are these levels that the Italian mathematician Fibonacci identified going back 600 years ago, that not only markets but other aspects of nature, seashells, hurricanes, flower patterns, what are these aspects where markets tend to come back to a certain level? So we can see, for example, look at the hit right here in 2015, the bottom thus far of the bear market. Look at how it came back to the 50% retracement level of the entire bull move that preceded it. So we always have Fibonacci levels labeled up here as well. Now, what I have not yet labeled are the trend lines. So we look at trends. Let's look at the long-term trend line here in gold. We're talking magenta, long-term, all the way back from the beginning of the bull market in 2001. Look at how this trend line was hugged for about 5 years here. Began to accelerate in 2006 and accelerated all through 2011. And look how this trend line, though, it almost seems like the market wants to come back to this trend line that's just been doing its own thing for the last decade. And the market's getting closer and closer to meeting with this trend line sometime here in the next 2 or 3 years. Isn't that very interesting? Now, we have another trend line. This was brought up by a number of individuals over the last few weeks. And, we take a look at the long-term perspective. We don't always look at the shorter-term perspective in every single update. This does go to premium subscribers every single week, but you must understand that I do this as a business. And so not all of the information can go out for free every single week. I simply hope you understand the perspective that I'm coming from as an independent analyst. Okay, I have to make my living somehow, and I do it by analyzing these markets. So we look at the downtrend here that began in 2011. Notice the hits here at 1900, hit at 1800. Notice the hits here in 2016, just below 1350, moving down like this. Look how closely this trend line was hugged, and then it was broken out decisively here in 2017. Now, at the time when this breakout happened, I said that means that all things considered, this trend should not be lost. Now, some people misinterpreted what I said, or perhaps I did not emphasize the points properly. That may be the case. But when we see a downtrend like this broken, okay, very clear downtrend, it does not mean that the market has to skyrocket immediately. It does mean, however, that the broken trend should be respected. And this is a process by which markets begin to change. They begin to change from a falling market to a stabilizing market. And all things considered, after that, what happens is a rising market. So when this downtrend happened, the point that we made here was that this is the logical outcome from a downtrend break. Notice, in the most bullish scenario, we would have seen an acceleration immediately in this market. So that fits here with the green shading. In the least bullish scenario, which unfortunately it appears this market is following, it simply means that the downtrend in question will not be lost again, but the market can move lower, but at a lesser rate. So can we see that here? That is the importance of a downtrend break. They are important technical trends. They do not mean a market has to skyrocket immediately. We can see another trend that began at the 2015 bottom, was hit here in late 2016, was tested here, and then broken lower. So what do we have here in the gold market at the moment? When you have a broken downtrend and a broken rising trend, that leaves a range-bound market between two broken trends, between strong support here in the low 1000s, around 1050, and between strong resistance just above 1350. This is what we have here in the gold market, with a long-term rising trend that is going to be exerting influence here within the next 12 to 18 months as well. A range-bound market, all things considered. Now, this doesn't catch a lot of headlines, but it is very accurate. So notice if you go back to a lot of the people, over the last 6 months who have been saying U.S. economy is going to collapse, gold is about to skyrocket. And we were not saying that here. We were saying there could be a modest retracement of the broken trend, but no skyrocket is going to be happening. So I may not sell a lot of headline-catching subscriptions that way, but I would rather be someone who speaks the plain truth as how I see it, because I would rather build a level of trust with you, the viewer, and with subscribers to the premium service, that we have a sense of what is actually happening here to the price of these markets. Okay, so we have a range-bound market for gold until something changes, but this is expected to hold now for the time being. Let us zoom this chart in and look at some more of the detail here from the most recent low. Now, here was that trend that we were talking about, the most recent rising trend, which is now broken. What formed after that? A nice, sharp, parallel declining channel. This has now been broken. Where does that leave us? With a short-term retracement of the primary trend break. Now notice here that this short-term retracement channel is going to be meeting with the primary trend break here within the next several months. So this is where, all things considered, when you have a broken primary trend in the market, flat horizontal resistance, the major break from the trend, and you have a recovery channel that's now happening. What we expect, when we draw the retracement, exact same chart, but retracement Fibonacci levels onto that, we're talking retracement potentials of this downcline. All things considered, look at the confluence of resistance that we have here coming into the upper 1200s, right around 1300. We are talking the 61.8% Fibonacci retracement. We're talking the upper level of this trend channel, and we're talking the broken primary trend from last year. Major resistance here in the mid to upper 1200s as we approach 1300 in the price of gold. So the highest probability expectation now, if you're a gold investor, if you're a stacker, if you want to try to time your purchases better, what we are saying, and if you want to try to get short this market, is that there should be an additional period of advancing trend here over the next 1 to 3 months into the confluence of resistance, and then gold should take another major significant decline. Okay, it should fail to recover the broken primary trend, is the short to intermediate term outlook. Does this mean to sell all your gold right now and try to buy it back $50 or $100 cheaper? Absolutely not. Of course not. Does this mean that if you are heavily leveraged, either in futures contracts or in options or in the mining sector, that you should pay attention to this and perhaps not buy back in entirely 100% of your portfolio here at the upper range, at the confluence of this resistance level, and perhaps you should wait until a high probability low forming in 2019? Yes, that is what that means. Should you listen to this as we bring back the long-term channel here, the long-term chart? Should you listen to this analysis, this low that we expect to be setting up here in 2019, should you listen to this with 100% of your investment capital? Absolutely not. I hope that you do not take anything that I say 100%. I can be wrong. Every single form of analysis on this planet can be wrong from time to time. This is a system that works for me much more often than it fails. This is the system I've been developing since the mid-2000s. And I think once you get to learn this, you will see the power in this system, the power of following the most clear trends across these markets. Trend breaks, horizontal support and resistance level, Fibonacci retracement levels of the move in question. Are we talking the entire bull market? In that case, we need Fibonacci levels to talk about the entire bull market. Are we talking about a retracement of a broken trend? In that case, we need to zoom that in, talk about Fibonacci retracements of the broken trend. But should you place 100% of your confidence into this analysis? No. You should use this along with your own analysis and make your final decision. What I do here is I publish the exact research and analysis that we are using here, myself and several associates. This is what we're doing here. We publish it for those who like to use it alongside of us so that you can form the absolute best decision. Gold should be coming down into the, after it retests this broken trend, should be coming down into a nice low in 2019. And I think that low is going to match the significance of this low in 2015. I think we're going to be looking at something like a very nice move off this next bottom that's setting up. It is not here yet. It's not here yet. Would I like it to be here? Sure. That would increase the value of my own savings, my own precious metals. But I'm talking about what I'm expecting here based on the observable trends on the chart. Okay? There should be a backing off and a significant low setting up. It is not here yet. Let us switch over and look at this oil market. Now we're talking about the liquid energy. Okay, and of course everything moves in cycles, everything moves in patterns. Oil is not going to be the most important form of energy that it is now. It's not going to be that way 100 years from now. This civilization has moved from all sorts of energy, from firewood to whale oil to steam power. And now we are heavily reliant on fossil fuels, and we're just beginning to make a transition to other sorts of fuels, some renewables, and who knows what we're going to find out there over the next 100 years. But right now, it is what it is. And you have articles like this, and I think why technical analysis gets a bad rap is because if you just do a basic search for oil price, forecast, oil price fundamentals, you'll get articles like this that talk about a couple days or a few weeks worth, and they pull out some random stat here about Friday's OPEC-led decision to trim output by 1.2 million barrels. Or we can look at something like this that shows a chart from about a 6-month time frame. What does it all mean? Where does this fit in? How can we make sense of any of this with this market that is so important to international trade and finance? We have to bring up the very long-term chart. So this is the system that works. When you're lost, when you're feeling lost in the financial markets, it's good to take a step back and look at the big picture. And you can find your way with the big picture. Trust me, it works. You just have to have the system that you have confidence in and that you can come back to. So we are looking here at the 20-year view of oil prices. Okay, some pretty wild fluctuations. But what are some of the things that we can say here about this oil price? Despite the manic, almost bubble-like characteristics that were taken on in 2008, remember how everyone was convinced about peak oil back then? And then what happened? The price of oil collapsed even more than the stock market during the crash of 2008, showing us a lot of this price movement was bid up by speculators. This was not all fundamental demand. So the peak oil theory was wrong in practice. This may be right at some point later in our lifetimes, but it certainly wasn't when any of the proponents were discussing it here in 2008. That is what the chart has shown us. Recovery, notice when we have an impulsive collapse like this, the recovery fails to overcome the previous peak. Secondary collapse, falling back below a crash low. When something falls below a level that was a panic level. We're talking once in a generation panic here. When something then falls below that 7 years later, it's telling you there's a real weakness. There's a real fundamental weakness in the price here in oil. There's something you could say, if you are wanting oil to go lower, there's something really wrong with your thesis. If you see a market that moves below a generational panic level. So this is why it's important to look at these long-term charts. What was the cause? Why has oil been so weak? Well, for example, the United States has become oil self-reliant, thanks to the shale revolution, of which I'm not an expert fundamentally, but I can certainly interpret that price action and tell you all that oil that was coming in here from the shale revolution getting sold on the market, and you can see a rising trend supporting this period here of sort of stagnant oil prices, which failed to eclipse a peak, and then boom, look at what happens when that trend line is broken. So all that oil that's being sold on the market, trend line broken, secondary collapse, right? So anyone saying it's not important to pay attention to the most basic trends here in this market, I just absolutely disagree, because look how important some of these basic trend lines are to managing price risk here. So what else can we say? Here we are. We saw oil prices recover to almost $77, and then another mini collapse happening. Let's bring up a few trend lines. Where are we here? Wow, isn't this incredible? When we draw a trend, a very basic trend line from the absolute peak in 2008 through some of these peaks here in 2013, that this matched exactly, and I'm talking exactly, with the peak here at 77 and change back just 6 weeks ago. Exactly. Now, there's a few other things that we can draw in here as we look at those hits on the trend line. We can look at the primary channel here that formed with the lower support level. And I'll just tell you, I have some private clients that I work with, and we were talking about this peak here in oil, and I was telling some private clients to get defensive at this time, because all things considered, we should get defensive after a move like this, and we should not be looking at this as a time to be buying oil. Okay, so if you are involved in the commodity markets and you would like to speak one-on-one, know that I do work with individuals. We do technical analysis like this to try to align with the probabilities, to simply try to stop you from going all in at a point like this, or at least saying, hey, let's take some profits. If you've been in a nice trade here, a nice investment in oil over the last few weeks, let's take some nice profits. Now, zooming that in, it's very interesting when we look at the channel that formed here, the primary channel. All things considered, as I said before, this form of analysis cannot be perfect, because no form of analysis is. But when we look at the trend channel that formed here from the 2016 low, very nice parallel trend. Notice these hits. So there was this confluence of resistance here, talking about this recent peak. And if I was short the oil market, I would have taken my short off right here. Okay, right at this $59, $60 level. Why? Because it matches the parallel of the upper trend channel. So this is the logic of a technical system. And notice, if you had taken your shorts off here, or if you had said, I'm going to go long here because it matches with these lows, you would have been wrong. You would have gotten flushed out. However, what I do want to say is you would have been right for the majority of this move. You would have taken a small loss down here, and then you would have gotten out. Why? Because when a trend line like this is violated, as it was here in November, when it's violated, you then get out of the position. All I'm saying is we can see here that oil was even weaker than I expected it to be. Where does that leave us in the price of oil right now? What is coming up in the price of oil over the next several months, the next several years? Let's look at it. Okay, the big thing that I would say, if you're a speculator, if you're looking to reestablish some oil positions right now, be careful about trying to catch a falling knife. Because this market, if we were to even draw a little trend line right down there, the rule is the steeper the trend, the less important the break. So when this breaks, which eventually it will, I do not expect this is going to be the final low. I think there will be some sort of recovery that comes up here, perhaps back to the $59 or $60 level. I don't know exactly how high that recovery is going to be. But what I would tell you is this is not going to be the final low. And you should start forming a trend analysis from this recovery. So you will follow a trend analysis. And the closer that the oil price gets to this broken primary channel, this is the opportunity to go short again, the oil market. So the oil market will be setting up. This will be one of those trades that we do in the new global macro service that is going to be launched here in the not too distant future. This will be one of the short trades that we do. It will be shorting oil. And I expect right before we initiate that short, there will be a lot of news coming out saying the low is in for oil. Hey, oil prices are recovering, fill in the blank. And then that will be the time to get short. And this will be a technical short. And we will probably look to cover that short somewhere in the vicinity of the recent lows down to this $42 per barrel level. Okay, so here we're looking at the intermediate term perspective for oil. The important things are that this channel was broken, and let's bring it back to the long term. Where did that top come in? Precisely at the long-term downtrend line. Now, what is happening for oil over the longer term? This is critical, I think, if you're in the energy markets, to really take a look at what's developing here. Okay, the 7-year, it depends when you want to define the beginning of the oil bull market. Some would say 1999, some would say 2002. Let's say early 2002 through 2008. 6.5-year bull market. Okay, collapse. Partial recovery that failed, new low. Notice these lows are coming down into this multi-decade support level here between 25 and 37. Let's round it off. This multi-decade support level, we're simply talking about a level where oil was basing for many, many years. We're talking about that stage 1 base. It accelerated, it formed mania, and notice it has then come back to that base. We were talking about this last week with the Bitcoin market. We're talking about oil now. What is setting up for oil? Notice how the attempts to come back into this base here between 25 and 37. Notice how this is taking the shape, if you look at these long-term trend lines here, this is taking the shape of what? A giant terminal wedge. This is a very important pattern. It does not mean that oil is about to skyrocket immediately, but we do have a very strong sense of where this market is going to be coming back into when it forms its final low, most likely within the next 5 years. So if you're hoping oil is, going back to 100 anytime soon, I would say not in the cards. What I would say is after this little recovery that should be setting up here, another series of lows will be coming for oil, most likely first back to this support level here in the upper 30s, low 40s. We will probably see another attempt at the long-term downtrend, which will fail again. And a new low will be setting up in oil at some point within the next 5 years, matching this series of lows here. And this market will be moving tighter and tighter into a wedge pattern in the region of this multi-decade support level into the middle part of the next decade. It will get very boring at that point, probably in the early 2020s. This market will get very boring for both the bulls and the bears. But this will be an excellent market, especially if you're in the earlier side of your career. If you're in your 20s or 30s or even your 40s and you're looking, hey, what is going to be a fantastic investment theme? Not now, but let's say I want to save some money, earn some money now. What is going to be a fantastic investment theme next decade? It's going to be the energy complex again. When this pattern begins to work its way into this wedge and finally breaks this long-term downtrend, the energy market will have put in a major generational low. And anything related to energy, whether it's oil, whether it's natural gas, and as a side note, this is going to apply to renewables. the time for this is going to be in the mid-2020s. It's not here yet. The impulsive nature of these declines with lower lows is showing us that oil is not going to do anything significant to the upside for the next several years. It's going to be a fantastic opportunity in the 2020s. We will be trading these swings just like this, these swings higher and lower in the new global macro service that will be coming out within the next several months. As I said, this will be coming out. This is pending. We will be covering other markets, not just gold and silver. We will be covering oil. We will be covering natural gas, copper, platinum, palladium. We'll be covering bond market trades. We'll be covering currency trades. All of this coming using the form of technical analysis that you were seeing here, a form that attempts to strip out the emotion from these markets, attempts to strip out those articles talking about short-term stuff, the articles talking about, cherry picking fundamental data points on OPEC cuts or perhaps a decline in mine production by a nominal amount in the gold mining industry. All these fundamentals that come into play, they are factors that impact these markets. But the bottom line, what do we care about most? It's the price. I would ask you to really look deep down within yourself and ask yourself, whether you're an investor, whether you're a long-term investor, and you say, I don't care about this for the next 20 years. Okay, 20 years from now, what do you care about? Most likely the price. Even if that asset is something that you intend to pass down to your children or your grandchildren. Why do you want to pass it down to them? Because you think the price is going to do something, right? Most likely something higher. So what we do here is we just admit that what we care about most is the price. And we focus on trends in the price. Even though we study and we understand the fundamentals that are causing the trends in the price. That is pending. You will hear more announcements about that coming up. We will not be focusing on the gold and silver mining sector in that new macro service. There is a special place for the precious metals in this, and that's why the Precious Metals Intelligence Service is going to remain a dedicated service. It will be a dedicated service because I think something special is setting up in the precious metals that will not apply to all the other commodities. There will be excellent opportunities for trading and investing in some other commodities well into the next decade. But the precious metals, from a personal standpoint and from all of my studies, especially when we look at relative strength with, for example, the price of gold relative to all the other commodities, it's clear to me that something is happening in the precious metals that deserves our attention. And I intend to be making a fortune when these miners finally bottom and then move into the next advance, which will be from the period of the lowest relative valuation that has ever been seen. And what tends to happen when you have something that's the lowest valuation that it's ever been seen that then moves in the opposite direction, there's a springboard effect. And I think that is coming up. If you're interested, that is called Precious Metals Intelligence. This is the service that's available right now, where we do focus on the precious metals. As I said, I also work with individuals one-on-one, just to let you know if you are considering the precious metals. If you're completely new to the precious metals, there is no question too basic for these consultations. I work with individuals who literally have never bought a single ounce of gold before in their lives. And I just make sure in a quick consultation that they do not get taken advantage of by some of the companies. There are excellent dealerships out there. I know some of them personally. One of them is called Bullion Exchanges. They are located in New York City. You can find a coupon code for Bullion Exchanges below if you want to try them. You can save $10 off an order of $300 or more. I know several other good dealerships as well. I have worked with Silver Doctors as well. I know the owners of Silver Doctors. Those are some good individuals too. They have my full trust as well. But what I do is I work with individuals to make sure they're buying the right products. that they're not paying too much over spot, that all these terms are clear. That's all the way from the most basic side to the more advanced side where I work with traders. We work with options traders, futures traders to try to align your portfolio or hedge your portfolio depending on the situation you're in. Of course, all from the perspective of an independent analyst who takes no fees from any of the companies or any of the investment options that we're mentioning here. This is all individual analysis for the benefit of subscribers. I do want to say thank you sincerely from the bottom of my heart to the individuals that are supporting these free videos on Patreon. And I will keep producing free videos. We will cover gold. We will cover other markets. Okay, so not everything is for a fee. Some things are going to be out here for free. And some people have chosen to donate for the free videos, and I very much appreciate it. You can find the link to that below if you would like to contribute to these videos. Once again, all of nature, including humanity, which is part of nature, moves in patterns. Can we recognize them or not? If we can recognize some of these patterns, we have the opportunity to change our lives and to do incredible things in this world for ourselves, for the betterment of the planet, and for others. So that's why I'm here. Thank you for tuning in. There are opportunities everywhere if we keep our eyes open. And I will see you this time next week.